Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 23rd of April 2024. Earlier I wrote on gold highlighting the 2300 level as a potential support area, and from here, as you can see, gold has actually bounced back to rise around the 2325 potential resistance level, which was previously support. But gold has found support from this bullish trend line, the 21-day exponential moving average, and the fact that the RSI is no longer at overbought conditions, at least on the daily time frame. The trend has been quite strong on gold since the middle of February. So after a sharp drop like this, you're always looking to see whether the dip buyers will step in, and judging by today's price action, it looks like they may have. Let's see how gold will close from here, and if we get a hammer-like candle on a daily closing basis, then that could be a signal that the precious metal has bottomed out. In terms of potential resistance, 2360 is a key level to watch, because this level was support in the middle of the month before we broke below it on Monday. So let's see if a potential retest of this level will turn into resistance, or we slice through it and head back towards the 2400 level, which proved to be a key resistance level, as you can see by price action early this month. Above the 2400 is the all-time high at 2431. So far it's looking promising for the bulls. Let's see how the precious metal will close today's session. Along with gold, silver has also bounced back today, but it remains to be seen whether the gains can hold heading into the close. It has for now found support from just below the $27 level. Didn't quite get to this shaded area I was expecting. It may still do, but this is a key support area now, to watch should silver dip into this area. Previously it had served as major resistance until the breakout. So silver is bouncing ahead of that, which may mean that we might not get a drop to this area before we see fresh gains for the year. Moving forward, if the price of silver can close around current levels or a little bit higher, it will have created a hammer-like candle on the daily chart, which would point to further gains later in the week. In terms of resistance, 28 is a key area to watch, which is the base of this week's breakdown. If we move above there on a daily closing basis, then I think that would be quite bullish for silver. Now, don't forget, silver has not done what gold did it had repeated all-time highs. Silver on the monthly time frame, as you can see, didn't even reach the February 2021 high of around 30 before pulling back. So I'm really bullish on silver from a technical point of view, because we've had a major consolidation on the monthly time frame, and we have broken out early this month, right? So this is still in play on the longer term charts. Yes, we have seen volatility on the daily time frame and smaller time frames, but don't forget the macro picture. And judging by this breakout on the monthly time frame, I think silver is headed a lot higher from here. So let's see if the buyers will step in, as it looks like they might have today, and let's see if they will be able to drive silver back higher and break a few resistance levels to get the sellers trapped. Okay, so today's price action is beginning to look like it may be about to bottom out, but the close is very important. The euro dollar is testing this key resistance area, which was previously support in February and in December, between 106.95 to 107.25. This area is going to be pivotal. If we can close above this area, that would be clearly bullish, and it may pave the way for a move up to the resistance trend of this bearish channel that the euro dollar has been stuck inside since the end of last year. On the downside, support is seen at around 106.70, the high of Monday's range. If we go below that, then that would put the bulls in a spot of bother, which could then pave the way for a fresh breakdown to a new 2024 low below 106, which was last week's low. So we've seen a big recovery in the Nasdaq because the technology stocks are bouncing back ahead of their key earnings. The Nasdaq has found support from this area here. The shaded region marks the high of November 2021 to the high that was hit last year in December. So this shaded region represents a key support area, because previously it was resistance. We broke above this zone at the start of this year, and it was never retested until on Friday, when the Nasdaq found support right at the high of that range. It has now bounced back. It's up for the second consecutive day. The key level to watch on the downside is the high from Monday. If it can hold above this level, the short-term path of least resistance will remain to the upside. However, if we go back below this and hold below it, then that would point to a bullish trap, and in that case we could see another dip into this long-term support area that I had just highlighted. So keep an eye on that area. Now, for more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.